Hi, good morning.
A very good morning, sir.
Hi, Ramesh. Yeah, is my screen visible?
Yeah, yes, sir. I can see.
So, in the last session, we have started with the APP, Automatic Payment Program. Okay. So, basically, this APP is a tool that we can use to manage the mass transaction of payments. Yeah, incoming payments, outgoing payments from vendors or customers. We can make it possible in a mass with certain criteria or parameters. Okay. So, there the configuration level we have made, like which is the paying company code to be used, or which will be the what you can say, the payment methods to be used, or the bank accounts to be used in the order, I mean in the ranking order. And so such type of configurations or scenarios we have made activated with the configuration. Then some configurations we have updated to the vendor masters as well to activate for this one for the accounts for the automatic payments. So here what we have done is the default payment method. Yeah, we have assigned to the vendor. Then we have processed the APP. So while processing the APP, we have seen that system will filter out the total vendors, yeah, with the criteria what we have made in the configuration. And we could see that system has made the payment to those vendor line items, yeah, from the bank that we have assigned in the configuration APP. Okay. And after that, it was the generation of account statement using the concept of correspondence types. So standard correspondence type SAP 06 we have to generate account statement. So the print program, the print format, everything is available in the account statement SAP 06 correspondence type SAP 06. Using that one, we have generated a periodic statement for a customer transactions for a particular time period. Then it was dunning. Dunning is basically the generation of reminder letters we send to the customers for the overdue receivable amounts. Okay, so there also this in the dunning procedure we have made the criteria like how the dunning have to be processed. Okay, so what will be the how many times, or what will be the how many levels of dunning we have to process, or what will be the interval between the levels, or the grace period, or the minimum amount to be considered for generating a letter. So such type of configurations like we have made in the dunning procedure. And the running procedure we have assigned to the customer, so that later once we have generated the running letter, okay, the customer balances based on that scenarios have been like considered for generating a reminder letter. So with the default print format, yeah, we have seen that how the system generated a letter as a reminder for the customer. The running. So running levels, running like notices or running letters. Yes. These are the main points we had gone through. And any more question from this, Ramesh?
No, sir. No.
No.
We can go ahead.
So our next area will be with the interest calculation. Okay. Interest on loan. See, consider that we have a loan amount of maybe 10,000 rupees. Okay. So a bank loan of 10,000 rupees from maybe 1st of May 23. Let this be having an interest rate maybe 10% per year. So we can periodically calculate and post the interest to this bank account, I mean bank loan account. So for example, after 10 days, we are calculating the total interest. Okay, then maybe on 10th of May or whatever it is, we can say the total interest amount will be like this amount into 10%. Yeah.
Yeah.
10 days. So for 10 days, you will be having a total of 27 rupees as the interest. So that interest again will be updated to the loan account. So interest paid to bank loan. So this amount have to be like posted. 0.39 or whatever it is. So this amount have to be posted. Okay, so on 10th day or after 10 days, once we calculate the interest, okay, we can optionally go for the posting as well, or simply we can do the calculation. Because if the interest rate is, I mean, interest amount is a little bit different, we maybe no need to go for the posting. Yeah, the actual amount we can post manually, but still we can do the calculation periodically if it is required. So whatever it is, we have to or we can calculate and post the interest to the loan account. Okay, so here in the configuration level, what we have to do is, see, this is our bank GL, loan GL. Okay, so this GL should be activated for a 10% interest. Yeah, and the posting also have to be made to the interest paid and the bank loan. After 10 days, once we process the interest, system have to goes like this. Okay. So for this one, we use an indicator. An indicator we have to specify. See, at the GL, there is an activation for an indicator. Whenever we open a GL, say create bank interest. Here we have an interest indicator. So an interest indicator we have to specify here. Yeah, that interest indicator should have the rate and all. Okay, so the rate we will be specifying not directly to the indicator. Once we start configuration, we'll get more idea how it will be activated. Yeah, how the rate will be specified. Okay, even for the posting also, we have to do some activation. Okay, so first we have to create the indicator for the loan account. So indicator we will create first. Interest indicator with OB46, or even we can say like this is the interest calculation type indicator. Either we say interest calculation type, but we're going to create an indicator like all the way we are going to use as an indicator by creation or by assigning. So OB46, we will specify an indicator. So we have the standard indicators like interest calculation for the item wise or even the total balance wise. Okay, let's go for a balance interest calculation. 02 is the standard key for the balance interest calculation. Yeah, we can copy this to an indicator. So we'll go for I2. Our indicator be I2. I2. So we will copy the 02 to I2. Yeah. So I2 for standard balance interest calculation. Now, some additional activation we have to make to this indicator. Later at the GL creation level, we will assign this one. So some other activations to be made. So we make a prepare account for interest calculation. We will do some more activation to the same indicator. That is nothing but the year specification and the frequency of the interest calculation. Okay, so we have the indicator I2. To this indicator I2, yeah. So frequency we have to specify minimum. Frequency we have to specify. Frequency is nothing but see like the how we are going to calculate per month or like in 2 months. So some kind of configuration we have to do, and also the calendar type. Okay, so the indicator I2 that we have created, we can specify interest calculation per month, also a calendar type. Calendar type means it can be say different type of calendar. 30 days into 60, such type of calendar we can use, or 30 and 31 days kind of scenario, or 28 like 30, 31 in total 360, or even the standard calendar like 28, 29, 30, 31, 365 days in total. So anyway, whatever it is, the system consider the leap year and everything over here. So exactly month will be considered. Okay, even though we are specifying the month like that, but still we can manually specify a particular time period and we can do the calculation like this. At 10 days also we can do the calculation. Okay, so calendar type, save it. Now the assignment of rate to the indicator. So the indicator I2 we have to assign to the loan account, but no rate we have specified. So the rate we are not giving directly to the indicator. For that one, we create some reference keys, because different rate we can specify to this one periodically. From one period to another period, one rate, and from one another period to again another period, some another rate. So we can assign to the same bank account, bank loan. Okay. April 1st to 30, one rate, or May 1st to May 30, another rate. Such an activation also will be possible. Then how we can assign multiple rate to the same indicator now? So for that one, we use separate reference keys. Okay, to a reference key, we add the rate, yeah, 10% for a particular time period, and we can have another reference key with another rate for another time period activated to the same indicator. Whatever it is, to an indicator, we have to assign a reference key. Into that reference key, we will be assigning the rate. Okay, so first we will create one reference key. Yeah, one reference key we can specify. Let's go for R1 with the reference key for 10% interest. Okay. See, So here we'll create a reference key. R1, let it be a 10% interest. A short text we can specify if it is required. A date from which it can be active. Some date we can specify, and even the currency. Okay, we can save it. Okay, R1 is already there. Let's go for R2. Yes, R2. So again, here we have not given the rate, it's simply a description. Okay, so this was R2. R2. So reference key. Now we got the reference key. The reference key have to be assigned to the indicator. That we say time dependent terms. Yeah, references we have to assign to the indicator. Yeah, time dependent terms. This assignment I2 indicator to the reference key. We will do here OB81. Go for new entries. Here the activation have to be made from I2 to R2 for the credit posting and the debit posting. So once we execute this one using the same interest indicator and the reference key, the transaction have to be posted for the debiting of an account as well as crediting of an account. Okay, so both the cases have to be activated with the same reference key. Yeah, so we have the indicator I2. To this indicator I2, we will assign R2 for debit posting as well as the same R2 for credit posting. So the same key to be used or the same combination to be used for a debit and credit activation. So for that one, we use a concept of sequence number 1 or 2. So in this combination R2 sequence number 1, we assign for the debit posting. Yeah, and R2, the sequence number 2, we can specify for the credit posting. Okay, so now indicator, reference key, debit and credit activation with the sequence numbers. So interest indicator I2, reference key INR, effective from a date we can specify. Yeah, so here actually the debit or credit activation comes from here. So remember we had two type of indicator there, balance indicator or like item indicator as the ideas. So here see debit interest indicator for balance, credit interest for the balance. So both have to be activated. Yeah, so first we will go for debit as sequence number 1 using the reference rate R2. Remember, still we have not given the rate. Yeah, the same combination I2 R2, we may have to go for the activate for the credit activation as well. That we will update as a different sequence number, maybe 2 or whatever it is, different one. Yeah, save it. Next entry, the same way, I2 with INR. Sequence number 2, here we can make it as credit interest for the balance interest. Yeah. With the same reference key. Save. Yeah. So the indicator got activated with reference keys for debit posting and the credit posting. Now we specify the rate for the reference key. Okay, so always the rate can be specified for a particular time period. That is why we say this activation is time dependent. Yeah, so this rate we can specify like for the month of April one rate, for the month of May one rate. So kind of things we can do. So whatever it is, we have to specify the rate, yeah, for the reference key using a time or a date, an effective date. Okay, so enter interest rates. Rates we will specify here. So here the reference key R2 from a particular date, we can specify the rate C with OB83 reference key R2 from a date. Let it be from 1st of April. Okay, let's go for 10%. From May 1st, like we can have a different rate. Okay, save it. Yeah. So from this rate, from this date, the rate for a reference key will be 10%. Yeah. So the rate also got activated. Now with the posting. So once we execute the interest, system has to calculate the rate at interest as well as system has to post like this. Okay. So for that one, what we have to do is we have to specify we create the GL accounts and we have to assign the GL accounts for automatic posting. Also remember the loan account, when we create, we have to activate with the indicator because this indicator have all these configurations. Okay, it should be activated to that GL account that we have seen before. So first we have to define these GL accounts. So we have to create two GL accounts, one for the loan and the another one for the interest. Liability account 10005 we can create as a loan account. Let it be an HDFC bank loan. We will make it as an open item. It's a liability. Here we should specify the indicator. Okay, our indicator is item. Save it. Now the interest account. Interest account, let's go for copying this. Let it be normal expense account. Interest account. GLs we got. Now the GL assignments for automatic posting. So once we calculate, the amount, calculated amount have to be posted automatically. Okay. So assign GLs for automatic posting. OBV2. So here we have the concept of a business transaction. You know, like whenever we assign the GL account, there is transaction keys have been there to identify which GL have to be posted. Here I can show you. See, business transaction. So based on the business transaction, okay, we have to specify the account, which one to be debited and which one to be credited. Yeah. So business transactions means, see, you can see business transaction 1000 means interest received posting. Yeah. And 2000 is the one for interest paid posting. So based on the transaction 2000, we have to specify the GL account. And one more thing, it's not directly we specify the GL account. If you check the business transaction 2000, see, these are the account symbols. Okay. So if you go down to 2000, yeah, so here you can see. So business transaction 2000, that is interest paid posting. For that, you will be having two symbols. See, 0002 for debiting. So for debiting, system will use the symbol 0002, and for crediting, we'll be having the standard symbol 2000. 02 and 2000. Okay. So once the system posts the interest, the amount have to be posted like this. Interest paid account have to be debited, and this loan account have to be credited. So to the symbols, yeah, we have to specify these GLs. So at the time of business, interest paid posting, system will take the GLs. Now, how we specify the accounts with the symbol? Okay, so these are the standard configuration. To assign the accounts, simply go for accounts. So symbols, you can see these are the symbols. Okay, so 002 for the interest paid account, and 2000 we will specify the GL account from which it will be credited. You can see that you have seen that in business transaction, like how it is. Now we will assign the accounts. Always the automatic assignment of accounts starts with the chart of account. We know, we have seen multiple times. From this chart of account, which account symbol, which GL account to be used. So we know account symbol 0002, that interest paid account have to be specified for debit posting. So we will do like that. 0002 with the currency INR, we will specify the GL 400005. Second one with account symbol 2000. The INR, yeah. So here we are supposed to use 100005, but here we use the concept of masking. Masking, what masking is? See, we may have different loan accounts. We may have different loan account from HDFC, maybe from SBI. In SBI itself, we may have multiple loan account. So every loan account will be updated with different number. Let's say 1005 is from HDFC loan 1. Let it be 1006 with a different account, 1007 with another loan account. So all these will be loan account for us. So whenever we process the loan, the interest for the loan, system has to do the calculation for the, interest, and it has to post to the interest paid account. So here we can do the concept of masking. Masking means any GL account we may have to do, or we may have to use for the interest calculation. For that one, we use, see, like this. Simply add 10 plus symbols. Okay, so this is, we say, a masking. So at the time of transaction, we can manually specify a GL account. So that GL account will be used for that activity, that process. Okay, so this is HDFC loan. At the time of loan processing or interest processing, we can manually use this account. So this account will be updated with interest. So next time let it be with SBI. Yeah, so that account can be used. Again, interest paid account will be used for the posting. So this is masking. Actually, we have used this concept of masking once before. Anyone can remember that? Where we have used the concept of this masking before?
OB52.
Correct. Yeah. In OB52, what was that, Harish?
Posting period locking.
Correct. Yeah. With the posting period, we have specified the masking, but in what case or where we have specified this masking? Anyway.
When determining account types.
Correct.
For opening or closing.
Correct. Account type. Okay. So there we had different account types, like all the vendor, customer, everything was there. And but there we have used plus, which means that all account types to be allowed. Okay, that is masking there. So here also we can have a general activation that we can use any GL account for the processing. Okay, so save it. So our configuration is over. Okay, now we'll go for the loan posting and the interest posting. So first we need some loan. Okay, so first we will go for a loan posting from a date. Okay, so we can receive some loan amount. Let it be bank loan. Some amount we can receive first. Yeah, we can make it as a JV, maybe FB50 or FI02. We can receive some loan amount. Yeah, let it be from 1st of May 2023. Okay, so we have the loan account, no, bank account, 1205 to the loan 10005 can debit. So receive 10,000 rupees. Yeah. Value date. Okay. Yes. So we could receive the loan amount. Let's check. Our loan account was 1005. Yeah, the loan amount have been created. Okay. So on this amount, for some days, we can calculate or we can post the interest. Yeah. So then interest calculation and posting for a particular time period. Yeah, you can make with f.5 2. So here for the company code RT01, our GL account, loan account was 1005, 1005. Yeah. For the time period, we have the loan from 1st of May. So 1st of May to maybe 15th of May 2023. Okay. So we will calculate the interest. So this account is having all the configuration with the indicator. The indicator is having the reference key. The reference key knows like from a particular date what rate should be calculated, yeah, and what are the GL accounts to be posted. Even that one also we have activated with the symbols. Okay. Now we're going to do a interest paid posting. So first we will calculate interest. Let's go for a standard interest calculation. Just execute. See, for 14 days, no, for 15 days, we can see which date we have given, 1 to 50. Yeah. Total interest of 38 rupees have been calculated. Okay. So this amount, if it is fine, we can go for the posting, because sometimes the interest we calculate will maybe will not be the same as that of the bank calculates. It can be different later, but okay. So if we are okay with this amount, or if it is confirmed, we can post this amount. Otherwise, we may have to go for the manual posting. Maybe for some provision booking, or some, what we can say, the accrual or deferral postings and all, we can go for a calculation like this. Yeah. So if it is fine, we can complete the posting of this amount. For posting, just go back, come down to the posting control here, post it. So this amount have to be, this posting have to be executed as a batch input processing. So this batch input we have processed for the recurring entries before. The same way, a batch input session will be created. Yeah, this session we have to execute for completing the posting of this interest. Yeah, you can specify a date for the posting. Let it be 31st of May 2023. You can specify a date for the interest posting. Yeah. Simply execute again. So the amount calculated will be there. After that, you can see a batch input session also will be created. Now we have to run this batch input session so that this calculated amount will be posted. Okay. So for running the batch input session, the same way how we have used, either you can go for the T code SM35, or just go with system services batch input sessions. Okay, you can go by SM35 or by this path so that you can run this batch. Yeah. Select the batch, which one to be processed. Process it. Let it display the errors. Process. Okay, so the batch input session have been completed. Now you can see a document 1 also 31 was posted in company code RT01. Let's check what is this transaction number, document number. document was posted. Let's see here. You can see that the calculated interest have been updated to the bank loan account. That amount will be with the interest rate, say. So the transaction will be posted that will update to the interest paid together with the liability. Liability also got updated with the what you can say, yeah, loan amount. This is how we calculate the interest and do the posting. Interest calculation and posting. Yeah. So basically here, this is from all the way with the indicator. Indicator holds everything. Yeah, using a reference key, we can have different levels of rate. So once we calculate the interest, in which time period it is, and for that time period, which is the rate it is, system will identify. Based on that, system will calculate the interest and will go for the automatic posting based on the GL accounts we specify through the symbols. Yeah, it will be posted like this. Okay, I think we have not updated to add the master data there. Actually, here once we about 5.2, there one option is there. Update must. Yeah, say update master records. Okay, if you specify this update master record, then the data will be updated over here with the master data. Key date for last interest calculation. Let's try with once again. We'll go for a different date, the same account, 105. Let's go for 16th of May 2023 to 31st of May 2023. Update master record. Okay. We'll complete the posting, and we will see this. Session, this one. Second interest also have been updated. Now let's see. See. Yeah. So on 18th of June, we have made a calculation up to 31st of May is the indicator. So optionally, we can activate the checkbox for updating the detail to the master records. First time we didn't do that, that's why. So the last activation will be updated over here. Now, so we can see key date for last interest calculation. So up to 31st of May, we have already calculated the interest. And on 18th, we have made that. 18th of June. It's today's date. Yeah. So interest calculation and posting. Yes. Any question on this? All right. So the next part is to generate the financial statements. So we know that like for the financial statements, we have a general structure, like we will make P&L. Okay, there we will we'll add all the expenses and incomes. Yeah. So the expense GL account numbers will specify here, or the income GL account number will add over here. Okay, so here we will be having a net result as it can be a loss or it can be a profit based on which one we have. If expense is higher, the result will be loss, or if the income is higher, the result will be a profit. Okay, so that result we will be adding to the balance sheet with the liability account and the assets GL. Yeah, so we will add this loss or profit so that our balance sheet will get balanced. So the liability GL we will specify here, all the assets GLs we will specify here. This is the concept. So here we can have multiple sub-levels. Sub-level in the sense expense, again we can divide into like indirect expense or direct expense, or again direct expense we can go for the purchase expenses or any other expenses kind of. Yeah, so indirect expense again we can go for the administrative expense or anyway. So multiple levels of or levels can be assigned with each item, and according to the requirement we can specify the GL. So system will take the report in that way. So in SAP also we will be having a structure like this. The structure of the statement we say financial statement versions. Financial statement versions. So we have to define a financial statement version like this. We have some specimen structure, but most probably we will be going for always like we create the structure like our own. Yeah, and because it's not a big challenge to define a structure based on the requirement of a client. Yeah, we can simply create the structure. Now you will see how we will create the structure and how we will assign the accounts. Okay, the T code will be OB58. We can create a version. Okay, we can create n number of versions, so every version can be one structure. Fine. Coming to the structure, we have the GL account specifications like this. Okay, so based on that, we will assign the GL accounts to each levels or node. We send levels or nodes. Expense account, which are the GL accounts to be specified. Like this way, all these nodes we can attach. In the version, so there are a lot of standard versions will be available, like country specific. Now you can see from here, a lot of standard versions are available. See, country specific versions. So here BAIN is the version for the specimen version for India. Even we can go with that, or we can create a new version structure. We check here, you can see how the structure have been made. So this is the structure. So for example, if we go for application of funds with the asset, we have all the sub levels. Yeah, if you drill down through this, you can see. So 4 levels are there for specifying all the land GLs. There you have 2 accounts specified. So in the fixed asset itself, you have a land, you have building, you have plant and machinery, and the GL accounts also you can see. 2 accounts for land, 3 accounts for building, like 3 for plant and machinery, like this. So like this way, we can create the levels and sub levels, and at the last level only we can specify the GL accounts. Yeah, not any intermediate level or not. We will not be able to assign any GL account. See, for example, this is fixed asset. This fixed asset is not the last level. Okay, so being it's not the last level, we will not be able to assign any account to this one. We come to next level, land. This is the last level. We can assign the GL account. So like this, we can go for a maximum of 20 levels. Okay, so here it is 1, 2, 3, 4 levels are there. So we can go for maximum 20. Yeah, only at the last level we have to specify the account. So all the main levels and sub levels we can create as per the requirement, and we may have to attach the GLs. So the report will be generated in such an order. So think about, we have such an account specification, and once we generate the report, all these nodes we have to drill down, and under the fixed asset with the land, we can see all the land balances with separate accounts, all the building accounts with separate accounts. Yeah, and in total we can see whether it's a profit or loss or what is the income expense. Yeah, so everything we can see. So this will be the net result with the expense and incomes. So system will balance this expense and incomes, and it will take to the net result, and that net result will be considered as either profit or loss. So some standard configurations will be there, like for calculating whether it's a profit or loss, yeah, and for the updation of profit or loss. But the remaining points we may have to do. Whichever the levels or sub levels we require, we have to create as per our requirement. Think about, you have the expense account like indirect expense and direct expense separately. Say for example like this. Let's say out of this, your indirect expenses are from 401 series, indirect expense. Okay, your direct expenses are with 402 series. Then how we have to do is just go for expenses main account, main level. Under that, you can create sub levels, indirect expense. There you specify all the GLs from 401 series, 001 to 401, 999. Yeah, direct expense. Yeah, let's go for the accounts from 402, 001 to 402, 999. Under expense. So this will be the main level. You can have sub level, and you can assign the GL accounts. Okay. So for here, we don't have that type of, what you can say, segregation. We have directly expense, incomes, and liability. Yeah. So with this one, now we will see how we can create a structure, the assignment of GL accounts, and we will go for the report based on the structure. So we have to create one version, yeah, to add all the structures. Go back. New item. Let's go for a structure, financial statements. Next, FSRT, lens, financial statements. English, and the chart of account. So all this GL account will be updated from a chart of account that we know. RTC. Save it. Go to items. So once we come to items, we can see some standard levels will be there. Yeah, arranged in not like arranged in such a way that under assets like all the assets or liabilities under balance sheet. No, not like that. Some standard keys will be there. So here you can see the net result key will be there. Okay. So the loss will be there, profit will be there, liabilities and assets also will be there. No other levels will be available there. So we can assign some name for all the available keys, and we can create the new, the required keys. First, we'll change the name. We'll make it this one as a net result key. Loss. So double click, make it as loss. Profit as profit. Liabilities and equity will be as liabilities. Here, make it as assets. Okay, so still in the structure or the version, we have to create the P&L. Expense and incomes is not there. Even the balance sheet table is also not there. So to create these items or levels of node, create items. Create items. Here we can create whatever the one we wanted. Like we need P&L, so we can go for profit and loss. We'll go for balance sheet. We need expenses and meet incomes or revenues. So you can see like all the items have been created under the version, FSRT, main key. Now we will rearrange. Under profit and loss, we will bring expenses and incomes. Balance sheet, we will move liabilities and assets. So first, we will see how we can move this expenses and incomes as a sub level for this P&L. Yeah. So for moving these two or any item, what we have to do is we have to select the item which we have to move first. Select, click on the select item. Now you can see it got highlighted. It's ready to move. Okay. So similarly, we have to select which are the items that we have to move. With this one, we can move the net result also. Once you have selected all the items to be moved, then select the item to which it has to be moved. Yeah. So these items have to move to P&L. Then finally select that level. Then it's not select here. You have to reassign. After selecting all these items to be moved, select the target level. Then reassign. So the items or nodes we have selected will be moved to the P&L level. Here we have to assign like it has to be moved as in the same level or as a sub level. How it has to be moved? These items have to be moved as same or sub level?
Sub level.
Sub level. Okay. So these items will be the sub level for P&L, subordinate, and the same way we will move the remaining items, like we'll move the assets, liabilities, profit, and the loss. We'll move to the target level or not balance sheet, reassign as the sublevel. Okay, now we'll specify the GL account. So in the expense level, if we have more levels like indirect or direct, again, we can create like this. And at the last level, we have to assign the accounts. For this, what we will do is, we will assign the accounts to expense, income, and assets liability. Now, to assign the GL accounts. So we have all the asset with 2 series, expense 4, income 3, and the liability 1. For assigning the GL accounts, again, select the level, go for assign accounts. So whichever the GL account, we have to specify with this node have to be specified here. Yeah, we can go for or go with all the 4 series number for 0000, yeah, 2499999. We will consider for the debit and credit transactions. Here enter, we can see all the GL accounts will be updated. Out of that, we can see that how many GLs are there. So for the moment, under expense, within this series, this many GLs accounts are there. So all the balance will be updated under this level. Okay. So again, if we create any more expense account, automatically system will consider into this level. Okay. The same way, we'll go for incomes. So 3 series number. Yeah, for the liabilities, that 1 series number. The assets with the 2 series number. Yeah, you can see how many income GLs are there, or even liabilities accounts are there. Okay, so this is the structure. So we can save the structure, activate. So based on this structure and the amount available in these accounts, we can generate a report. So we can create n number of financial statements like this. Yeah. Now we have got one structure with a standard account specifications and all. We'll go for reports. Financial statement reports with F.01. So based on the version FSRT, so the total amount available with the company code RT01, yeah, we can go for a report, FSRT. And also when system generate the report, we can have a reporting period as well as a comparison period. So by default, it will be like current year and the last year with all the period specification. Okay, so we can change it. Say for example, for the fiscal year 23, we have to compare with period number 1 and 2. So we can make it like that. 23 period 1, 23 period 2. By default, it would be like this. Yeah. Based on our requirement, we can edit the parameter. Okay. We can generate the report. So with that structure, system will generate a report like this. Okay. So this one, if you have to display in the structure that we have created, for that one, select the tree control. That will be listed based on a tree control. Yeah, so the tree control, you can see the report in the same format or the structure that we have made. So for us, like net result is like the expense is higher than the income, so almost 148,000. So the amount have been updated as loss with the balance sheet, you can see. But also you can do the drill down like this. Yeah, expense, rent. So we have only one company code selected. The same chart of account, if you have with multiple company codes, yeah, and we select multiple company code, we can see the total report over here. Different company code, what is the amount? And also below company code, we have made one more concept, that is business area. If there is any amount assigned to any business area, the amount will be displayed over here. See, for example, there is 32,000 with the rent under Reliance Telecom. Let's say 20,000 with business area 1, maybe Delhi, or the remaining amount with business area Mumbai. There will be 20 and 30, 12. So Mumbai 12 and Delhi 30, 20. Sorry, 12 and 20. We can see like this. But for this, we don't have not specified any business area. That's why there is no assignment with the business area. That total amount will be added to the directly to the company code. Yeah. So financial statement. Reporting period comparison and the difference also you can see. So for us from the 22, we don't have any balance. So that's why this is 0. Yeah. Let's check with 23rd, 2 and 23, 3. Now you can see the difference. Yeah, for second period and third period, what is the absolute difference with each level, you can see. Yeah, this is the standard financial statement report with the version. Any question? Okay, so we will go for a 10 minutes break, and after that we can start the topic asset account. Yeah.
Yes, sir.
Is my screen visible?
Yes, sir.
So our next topic with asset accounting. Asset accounting is another sub-module for the financial accounting FI. So before we had gone through general ledger accounting with all the GLs, accounts payables with vendors, and accounts receivables with customers. Okay, with every session, like we have seen the configurations for creating the particular account. Okay, so we know the way we have created the GL account was not the way we have used to create our vendor or customer. The concept was different, the configuration was different, but somewhere we could find the similarities. Okay, with the grouping, the number ranging, and all. But still, some additional concept have been there. Being we consider the like how we consider the vendor and customer account as well as the GL account. Okay, the consideration will be different. So the same way here, we have to have the asset accounts. So the configurations also will be different some in some areas, and also we can see some similarities with the one we have already gone through. Okay, whatever it is, we have to first go for the configuration to create the accounts. Then we may have to do the transaction. Yeah, so we have to get the report. The same sequence here also we will follow. For the posting also, if you remember, with all the way we have made different configurations with the document type and so on. So for supporting the transactions, then the report. So here also we are going to have the same way. We will do the configuration for the account asset master data creation. So different type of transaction we may have to do with asset accounting. If you know, like we have to with acquisition of the assets, we have to do different type of retirements, like sales we may have to post, scrapping we may have to post, depreciation we have to post. So different type of transactions we have to post. So configurations are required to support those transactions we have to do, and we do the transaction and we will get the report. Okay, so this is the way that we are going to have with the asset accounting topics. So starting with the asset accounting configuration. Okay, so the most important configuration with the asset accounting is a chart of depreciation. Asset accounting configuration, we will start with the chart of depreciation. Then what is a chart of depreciation? Okay, see, what is a chart of account? Chart of accounts. What is this chart of account? What we had with the chart of accounts?
Is a list of all GL accounts of the company.
Simple. It's a list of all the GLs. Okay. So chart of depreciation, we simply say it's a list of depreciation areas. Then what is a depreciation area? We will see. Okay. See, better I will show some depreciation areas, then we will get more idea. Okay, I will show some depreciation areas first. Financial accounting, budget accounting. Just a moment. Yeah, so it's a chart of depreciation. Let's see organizational structure. Chart of depreciation, copy reference, chart of depreciation. 0IN is the standard chart of depreciation for India, sample chart of depreciation India. So if you check here, you can see a lot of depreciation areas. See, all the way, all these are different valuation approaches for the asset accounting. Okay? The same set of transaction we can do with the book depreciation for depreciation costing. So we may have to evaluate the depreciation as per Income Tax Act 1961. Yeah, maybe we have to go for the consolidated balance in local currency, in group currency for the cost of accounting depreciation. So different type of valuation we may have to do with the same asset transaction. Yeah, so we generally say the depreciation will be there, but beyond that we may have different evaluation. Okay, for the Companies Act we will do some like depreciation calculation posting. The same time Income Tax Act we will do the depreciation, the calculation and the posting in a different way. So different concepts will be there, different valuation approaches will be there with each and every asset transaction we do. Okay, so these type of approaches or different type of evaluation we can do with different type of depreciation areas. And always the depreciation areas have to be assigned to an accounting principle. Yeah. Ledger group we have discussed. Ledger group. What is the ledger group that we have been using, or what is the leading ledger group? Leading
0L.
Yeah. 0L is the leading ledger. Beyond that, we may have different ledgers, maybe 2L, 3L, whatever it is. Leading and non-leading ledgers we have discussed before. So every ledger group have to be assigned with an accounting principle. Okay, say for example 0L be assigned to a local GAAP. Okay, 2L be with IFRS. So all these evaluations can be based on the same accounting principle or even with different accounting principle. So whatever it is, with the same accounting principle or with different accounting principle, we can do different type of evaluations with the asset transaction. So that type of evaluations, yeah, we will do using the concept of depreciation areas. So we can simply say depreciation areas are the evaluation or approaches for the asset accounting transactions. Anyway, we are not going to have all these depreciation areas because all the with each depreciation area we have to do that set of configuration. Say for example, this depreciation area as per Income Tax Act. Here we have to do the configuration for the asset block and all. Okay, we use the concept of block. Yeah, so that type of configuration have to be done over here. So the similar way, if it is go for the consolidated balance in local currency, group currency, yeah, that type of currency activation should be done. So each depreciation area should have its own set of configuration as well. So some of the depreciation area which will post, some will not post. It is simply for the we can say the reporting purpose. Yeah, so we can check the value. So it depends. Whatever it is, we have different levels of what you can say valuation approaches assigned with an accounting principle. Accounting principle in the sense, accounting principle will be updated using a ledger group. Actually, this is a ledger group. Okay, so this is a chart of depreciation with depreciation areas. Okay, so we are not going to use all these depreciation areas. We will remove whatever the depreciation area we are not going to use. Anyway, we are going to have only book depreciation. Yeah, there we will see all the configuration assigned with the ledger group, accounting principle. So chart of depreciation. We'll come back to the chart of depreciation because we have to set up a chart of depreciation with whichever the area we wanted, and that chart of depreciation area we have to assign to the company code. We'll create one, and the next configuration is to assign chart of depreciation to company code. Okay, so if we have to assign this depreciation, chart of depreciation to company code, there should be some conditions to be satisfied. Condition to be satisfied in the sense, the company code structure should have the currency and all properly made. Okay, And also another condition is the company code should have assigned with tax codes for non-taxable transactions. If you simply say a 0% tax code have to be assigned to the company code, 0% tax codes. Otherwise, system will not allow this assignment of chart of depreciation to company code. So better we will check that, and after that we will come to chart of depreciation and the assignment we will do. Okay, so first the tax codes. Check the 0% tax codes are available. What is the T code for creating tax codes?
FTXP.
Yeah, so FTXP. If the tax codes are there, we can simply ignore. So we have to create two tax code, maybe B0 for input tax 0% and A0 for output tax 0%. So I think we have already created this one. If it is there, we will assign tax codes company code. Yeah, then we will go for the chart of depreciation configuration. Let's see tax codes. And also one more thing here, better check which tax procedure is assigned to your country key, yeah, currently, because it can be changed by any other user. So our tax procedure was what was the tax procedure we've been using? See, I think visualizer is already there. Let's say the company code TXREL. Okay, so just go to the assignment first. With OBBG, country India. See, it's been different one. TXREL changed to TXREL. Yeah. Then check the tax codes. FTXP, B0 and A0. If it has been created before, no need to check here. FTXP, country India. Go for B0. It's not defined. Why it's not allowing to create? Tax codes are not with transport request. So we manually create the tax code with each system. It should not be what transporter. So why? So a 0% input tax with type V 0 and A0 with 0% output tax with A. Anyway, we had already discussed about this creation of tax codes and all, so that's why we are simply moving. Yeah. Now, the assignment of this tax codes to the company code. Okay, maybe even you can try directly to create the chart of depreciation without assigning. You can see system will stop it. Yeah. Let's go for OBCL. Okay, the company code. See, tax codes. Okay, so V0 and A0 specified. Now come to the configuration for chart of depreciation. So we have the standard chart of depreciation 0IN sample chart of depreciation India. Yeah, there all these are available. Now we will copy this. We will remove the unwanted depreciation areas and we will make it as a new chart of depreciation for our company code. Yeah, so and if you check here, you can see all the sample chart of depreciation available. See, country specific, a lot of depreciation areas will be available. So we can copy this and we can create new, yeah, and new depreciation areas. Okay, all the way country specific. So out of this, 0IN is the one for sample chart of depreciation India. Please don't do any change or deletion at this sample. Make a copy and do the changes there. Okay, so first we will define a chart of depreciation. Copy reference chart of depreciation. Our reference chart of depreciation is 0IN India. Copy 0IN to the target chart of depreciation, maybe chart of depreciation RT. Yeah, and the ranges now. Yeah, so chart of depreciation India have been copied to CDRT. Yeah, so we have copied sample chart of depreciation. So the description for CDRT RT also will be the same. If it is required, we can edit the description over here. Go for specified description, CDRT. See, here we can make it as Reliance depreciation area, chart of depreciation. Save it. Go back. Then remove the unwanted depreciation areas. Now we are going to use only book depreciation. Yeah, so we can remove all the other depreciation area from the CDRT. So this was the chart of depreciation we have created. Now we will remove all the others. Copy or delete depreciation areas, CDRT. Yeah, so here we can remove all the other depreciation areas because we are not going to do any of these activities or evaluations. Delete. Make sure that it's not from the sample. Yeah, remove. Now you can see only one depreciation area. With depreciation, we have to specify an accounting principle attached to the ledger group 0L because only 0L have the activation with our company code. We are not using any other ledger group, any parallel accounting or parallel currency we are using. So therefore, accounting principle assigned with the ledger group 0L. You can have many accounting principle assigned with same 0L. Out of that, maybe you can use local GAAP LG, could be a standard one. Yeah, go for local GAAP. Yeah, let's go 0L. Or company code also have the activation with leading ledger 0L. Yeah, save it. So we got a chart of depreciation with one depreciation area assigned with the accounting principle LG. Next is the assignment of chart of depreciation to the company code. CDRT, we will assign to the company code. Go back from here. Assign chart of depreciation to company code. Okay, this is open. System has not allowed us to assign. Yes. So here, chart of depreciation have to be assigned to the company code. So locate company code. Our chart of depreciation is CDRT. So are you guys able to follow this one or what? Or like is it a little bit fast or how do you think?
Fine.
Okay. Yeah. So if we find any difficulty means like just you can stop me, okay?
Okay, sir.
Yeah. Save it. So chart of depreciation we have assigned to the company code. The valuation approaches with accounting principle. Yeah, we have activated. Now, after the chart of depreciation with all the valuation approaches, next configuration is something to support the account creation. So we have to create different type of accounts. Maybe we have to create a machinery account. Yeah, so we will be having computer. We will be having what you can say motor vehicle. We have plant and machinery. Okay, so it goes like that. Now, the next configuration is asset classes. And what is important of an asset class is every asset have to be activated or assigned with an asset class. Why? Because the asset class configuration hold the standard configuration for creating these assets. Say for example, we know the number ranges. Yeah, you know all the accounts we have created using number range. Yeah, number range is one of the configuration in asset class. So for example, all the machinery we are going to use with one series, or all the computer we will be going with 2 series, 3 series, 4 series, 5 series. But we know that concept of the number ranges. Okay, so that number range have to be assigned with the asset class. First thing. Then the next configuration, okay, that is screen layout. The way we create a machinery will not be the one we use to create a building, or even the motor vehicle can be different. Okay. See, if we create one machinery, we may have to add the serial number or maybe the warranty details or some kind of details we may have to specify with them when we create a machinery. Same way, if we create a building, we don't need to specify any serial number or the manufacturer number or details. Okay. So the screen layout structure or the fields required to create one asset to another asset can be different. Think about a machinery. Yeah, So we should have a separate number range to be assigned. Even the screen layout structure also will be different to other items. Yeah. Yeah. Other items. So one more configuration is there with the asset class, that is account determination. Basically, we can say that asset class is a minimum combination of account determination, screen layout, and number ranges. Then what is an account determination? What is an account determination? We have discussed this account determination multiple times. What is this account determination? What is account determination? What we do with account determination?
We will map
Selecting
required
appropriate
GL
account.
accounts for various transactions.
Correct. So we do the mapping of different GL accounts for different type of transaction. Say consider this machinery. What are the type of transaction we are going to do with this machinery account? Yeah. First, we have to do the acquisition. Okay. Once we do an acquisition, one machinery reconciliation account have to be posted. We know the concept of reconciliation account. Okay. Apart from GL, for the vendor and the customer, we use the reconciliation accounts for mapping the balances. The same way, this asset is also a kind of sub account. So we need a reconciliation account, asset reconciliation account, to map all the main balances. So once we do the acquisition, or once we do the purchase of a machinery, the machinery account have to be updated. In which group it should be, this machinery account? Is it an asset group, liability group, expense or income group? If you create a machinery account, where
Asset.
Asset.
it will be an asset. Okay. So before that, periodically we may have to post the depreciation. Depreciation is what type of account? It's an asset account.
Expense.
Expense account. Okay. So if you have depreciation, we may have accumulated depreciation accounts. We may have to post. Yeah. So we will do the sale of assets. We make the sale of asset with a value higher than the asset value. So for example, for the moment, asset value of the machinery is 10,000. We make a sale of 12,000. So 2,000 we will be having the profit. Yeah. So
Gain on sale of asset.
yeah, on the sale of asset, we may have gain or profit on sale of asset. The same way, if the value is less, we may have like loss on asset sale. So different type of transaction we may have to do with even a single account. So that GL account, that set of GL account for each item have to be mapped using a particular determination key. Yeah. So we will create separate determination key for each asset or each asset class. For the entire machinery, we have to create one asset class. Into that asset class, we will specify all the accounts required for machinery transactions. Yeah. So machinery will go for RTMA. A determination key we can create RTMA. Okay. So the same way, if it is a computer, motor vehicle, or like abandoned machinery, yeah, any type of account you have to create, there should be a determination key, yeah, assigned with all the GLs. GLs we will create, and the assignment also we will do later. First, we have to create the determination keys. Yeah. And these are normal accounts. So if you create a machinery, computer, motor vehicle, or whatever it is, it will be the same way you can create. Another type of account we have to do is under construction assets or asset under constructions. If we create computer, motor vehicle, or whatever it is, it will be the same as that of machinery. So we are not going to all these things. We have the concept of under construction asset and a completed asset. What do you mean by under construction asset or asset under construction? What it means?
Capital work in progress.
Yeah, simply we can say capital work in progress, correct? But what is the like the meaning or what sense it makes if we say a capital work in progress or under asset construction?
The asset is still in the process of completion. The asset is not yet ready, not in a position to be put in use.
Correct. Yeah.
Put to use.
Yes, correct. Okay. So the asset is not in a condition to be to start to be used or even to put to use, okay, whatever it is. So it's in the construction phase. So such type of assets we say an asset under construction, and also once we complete this item or under construction asset, so are we going to use the same way? So for example, we will create we will do the construction of a building. So first, this building will be in under construction phase. Let's say like we took 2 years to complete the construction of the building. For 2 years, this asset will be considered as an under construction asset. And after 2 years, like what we will do? So for example, we have
We will capitalize as building.
yeah. So 1 million rupees like we have used for the entire construction of this asset. At the end of the construction, then what we will do? Yes, you said it, Harish. Can you repeat?
We will capitalize it to the building segment.
Correct.
From asset under construction to buildings.
Correct. We will do the capitalization of the under construction asset or AUC, which means that we will transfer the value from under construction asset to a completed building, completed asset. Okay. So the under construction asset will not have any depreciation cost. But once we transfer the value to the building, okay, it will be in the useful life phase. There we start the calculation of depreciation and all. So there are two phases for an asset. It can be under construction phase and a useful life phase. Under both the cases, we have to create separate asset and asset classes. Anyway, if we have to create asset means asset class is also required. Okay. Now depreciation we will post for an under construction asset, but at the end of the completion, we do the capitalization of the amount to the completed asset. That day onwards, we do the calculation of depreciation amount. Anyway, we will see the capitalization. So we have the topic of capitalization of AUC. So AUC we require and a completed asset also we require. So separate classes required, even determination also required. Yeah. Go for RT AU and RT PU. So 3 set of accounts we have to assign through the 3 account determination keys. Same way, we have to create screen layout structure. We know it can be different. The way how we create a machinery will not be the way we create an asset under construction or even a completed asset. Screen layout is required, and also number range is also required. We'll go for number range MA for machinery, maybe with 1 series, with 1 all lines. Okay, let it be with asset under construction with 2 series, 29999, or even a completed asset PU with 3 series with 39999. So once we create a machinery, system will use the number from this series. Similarly, 2 and 3 for AUC and building. So an asset class will be a combination of all these 3 items minimum. There we will have the entire configuration of which are the GLs to be used, what will be the screen to be used, and what will be the number to be used. Okay, so first we'll define the account determination key. after assigning the asset classes, account determination, yeah, we'll create 3 account determination keys. Yeah. Save it. Same way, screen layouts we have to create. Before we have done some screen layout structure. What was that? Some screen layout structure we made for the
Field status for field status variant.
correct. Yeah, the field status and field status variant we have done for the GL to be used for the transactions. Now, this screen layout is for the account creation, asset master creation. What are the screens to be used for machinery creation, or like, or what you can say, a computer creation? Screens to be used, or fields to be used for creating a asset master. So here also we will not be able to do the creation, but we can copy. Remember, field status time also we could copy, not to create new item, because all the fields are standard fields in the system. We will not be able to create a new field. Whatever the fields are there in standard, we can use with the statuses. Like, what are the statuses that we have used for field status variant? Field statuses.
Suppress, optional,
Optional is
required.
So here we will be having one more status, that is display. We will see. Okay, some fields we may have to keep in a display mode. Display mode in the sense some data will be updated, so we can simply view the detail, view the field. It will not be able to even edit. Okay, so that type of fields are also there. New status also will be there. Display. Anyway, we need separate screen layout for the asset classes, screen layout structure. Go back. Create screen layout rules. Yeah. So here, see, no new entries will be there. So we can simply copy any 3 item, copy, and make it as the screen layout structure for us. Yeah. Enter. Save it. Screen layout structure we have made. The same way, a numberage also have to be defined. Okay. So number range interval for the company code. The number range is company code specific. Yeah. So 3 number ranges we have to go. So MA, 1 series, under construction asset, 2 series, and the completed building BU, 3 series. Save. Now, combining all these details, we have to create an asset class. Yeah. Asset classes. So 3 asset classes you have to create. It's not really required to use the same key for creating the determination, screen layout, or number ranges. Okay, so for easy understanding, like we made the same key RTMA for all the keys. Okay, even you can use separate also, no issue. Okay. So now we'll create the asset class machinery by combining all the 3 data. Go back, define asset classes. Entries. Our first asset class RTMA. TMA. Yeah. We'll make it as machinery. Account determination is same RTMA. Screen layout is also RTMA. And the number range is MA. All these are alphanumeral keys. Okay, in the real scenario, always we use the numbers. But here, we can use like this. So, okay, fine. Save the as a class for machinery. Create as a class for asset under construction. Extend tree, that is RTAU, asset under construction. The determination key RTAU and RTAU and AU. Remember, whenever we create an asset class for an AUC or under construction asset, okay, see, the status of AUC have to be mentioned. No AUC or summary management means like the other assets we are not creating as an under construction asset. So, for example, machinery. There is no AUC concept for machinery. Anyway, we have not done. So, any asset class, if we are creating, we have to make the status that, say, for example, here if we specify line item settlement, which means that we discussed about the capitalization. Yeah, capitalization means the transferring of amount from the under construction phase to the completed asset. That we say capitalization or we say settlement. Here, this under construction assets will be activated for a settlement. Yeah. So we have this investment measure also. Investment measure means like this account will be created from the project system module. We have the module PS, that is project system, that is the same, like the similar module as that of like FI. So with that one, we create the budgeting, the projects. Yeah. So based on that, system will create the AUC. Now generally we say CV, capital work in progress. See, we create a project to create a building. For that one, we have the concept of WBS. WBS. What is WBS? Any have an idea about WBS? WBS. Let's think about, we are going to construct a building. So the building itself, we will make it as a project. Under this project, we can have different WBSs. What is WBS? Any idea, Harish? WBS means work breakdown structure. The entire project of building, we can make it as into different work breakdown structure. We can make it as civil works or maybe mechanical work, or what else? We can have electrical work, okay, or plumbing work, or AC and other things. So different type of work breakdown structure we can specify. Each work breakdown structure we can have the budgeting also. Budgeting. How much will be the budgeting for all the civil works, mechanical works? And we can utilize the budget, we can make the POs and so on. So it will go like that. Okay, so here, once the each work breakdown structure completed or based on the completion of the project, yeah, this amount from here also can be settled to an AUC. So that type of thing from the project system module will come through as an investment measure support. Okay, so no manual asset settlement will be possible to an AUC if it has been activated with investment measure. It will be created only by the project system module. So leave it. For financial accounting, we can do the settlement from a under construction asset to a completed asset by the line item settlement. Save it and go for third asset, that is the completed asset building. RTBU building, RTBU, RTBU, and the number range BU. Okay, so here it's not an AUC. So no AUC should be there. Yeah, this amount in the building we are not going to settle to anyone or any other item. No, it will be the final asset. Same. Yeah. So we got 3 asset classes with separate determination keys, scale out rules, and the number ranges. So for the determination key, we have not specified any accounts. So for each asset, which are the GL accounts required, we have to create those accounts, and even we have to assign that account to determination key RTMA, similarly to RTAU and RTPU. Okay, so the GL account creation and assignment and the rest of the configuration, like we can do in the next session. Let it be there up to the asset classes. Yeah. So like today we have started from the interest calculation. So for the interest calculation, with an interest indicator, we specified the rate of interest using a reference key for a particular time period, and also it got activated with the debit and credit posting. Yeah, and we got a loan amount, and after this loan amount we have calculated the interest. So we have the concept of account symbols to identify the GL accounts for the automatic posting. Yeah, so business transaction 2000 is the interest paid posting. There we specified which GL account to be used for the automatic posting of interest. Once we have calculated or posted the interest, we have seen that system have done the posting to that particular GL automatically. As a batch input session, we have made that. And after that, it was financial statements. So the structure we have made as a financial statement version. There we made like whatever the levels or sub levels we required beyond the standard ones. Standard in the sense like net result was there, loss and profit was there. Okay, so beyond that, whichever the levels and sub levels we require, we have created and we have rearranged in a way that which make a particular logic, and also the GL have been assigned, and with that structure or with that version, we have generated the statement report. Okay, finance statement report. After that, we have started the asset accounting. The next module, sub-module, is financial accounting. Here, we are going to do all the fixed asset configurations, transactions, and reports. Our configuration started with the we checked whether the 0 tax codes are assigned to the company code. Yeah, we have assigned that one first. And after that, chart of depreciation. In the chart of depreciation, we could see different type of valuation approaches for the asset transaction. Yeah, so there we are going to use only one depreciation area, that is 01 book depreciation area, that we have copied from the specimen chart of depreciation 0IN. This is sample chart of depreciation India, and we have created a new one, CDRT. That CDRT we have assigned to the company code. And next configuration was with the asset classes. It's a combination of 3 data: account determination, where all the required GLs can be assigned; screen layout, where all the fields can be assigned; and the number ranges, the number the system used to create each asset will be there. So by combining all this data, we have created an asset class. Later, once we create an asset, yeah, so we are going to use the asset class. See, if we are going to create an asset, directly system will ask for the asset class. because this asset class contains the entire data about the number range, what scale level to be used and all. So each asset will be assigned, or every asset will be assigned to one asset class. And also we have discussed about the concept of under construction asset. Yeah. So any asset which is in a construction phase and not in a useful phase, we say an AUC. Yeah. So no depreciation, nothing will be there in that level or in that phase. Later we'll do the capitalization or the settlement, so that we will get a useful life or useful asset, a completed asset. Okay. So for that one also we have made some configuration with the asset classes. Remember, for AUC we have made that line item settlement. For the other assets, no AUC activations. Yeah. So we got 3 asset classes for machinery, AUC, and the building. Our next configuration will be with the assignment of GL. So we have to create all the GL accounts required for all these type of assets. Then we will assign to the determination keys. This will be the next configuration. We will do in the next session. Okay. So any question from the points that we have gone through today? Yeah, Harish, Ramesh, and Neha? Anything?
No, sir.
Yeah, all right. Then we will see you in the next session on next Saturday. Yeah.
Thank
Sure,
you.
sir.
Thank you so much. Bye.
Thank you.
Thank you.
Bye.